Welcome to Money Sense, where we go beyond the numbers to help Canadians design a wealthier life. With host Brent Laux and trusted experts Kevin Hagedis and Andrew Rodych, partners at PWM Private Wealth Counsel and portfolio managers with Q Wealth. Whether you're preparing for retirement, designing tax-efficient income, or planning for future generations, financial decisions can be overwhelming. With a spotlight on pension-style investing strategies that prioritize long-term stability, Kevin, Andrew, and the PWM team will share their insights and perspectives to help you protect what you've worked a lifetime to build. Because effective financial planning should feel like laying a strong foundation. This is Money Sense.
Hello and welcome to our Money Sense program. Money Sense is where we go beyond the numbers to help Canadians design a wealthier life. Trent Klarenbach, I'm joined by Andrew Rodych. Andrew, a registered portfolio manager with Q Wealth Partners, and he's a partner of PWM Private Wealth Counsel. And we're joined by our very special guest today, Trent Klarenbach. Trent, the founder of Klarenbach Research, which provides independent grain market analysis. Andrew, good to see you.
It's great to be here, and Trent and I have been working together recently. Many of our farming clients rely on his reports to decide what to put in the ground and how to market their grain. So across the province, his research on farmland prices has become very timely, which I'm sure will drive much of our discussion today.
Absolutely.
Right.
Always a pleasure to see Trent, having him back on the program. And for those that don't know you, Trent, tell us a bit about your background, your story.
Well, thanks, Brent. I grew up and farmed in the Etonia area, southwest of Kinnersley, before exiting a successful environmental consulting company. I'm an independent grain market analyst. So what I do is I provide an institutional level technical analysis of grains, oilseeds, and special crops and other cash crops, including durum wheat and lentils. And by doing that, I provide farmers with the same tools that grain companies are using. I provide them with the same tools that traders from Bay Street to New York to Chicago and Geneva, and really help level that playing field between the farmer and the grain buyer.
So what inspired you? What got this started for you, Trent, as far as beginning your company, Klarenbach Research?
Well, I identified a gap in the grain marketing analysis and advice farmers were getting. And I really want to also highlight that selling grain often becomes an emotional guessing game. And often you're just selling for cash flow or bin space. So what I do is I use technical analysis to study the market behavior and the psychology of the market participants. And I help farmers identify the beginning and the end of trends. I identify the four stages of the market structure, and which are driven by our emotions, such as disbelief, euphoria, and denial. And I believe that if we understand what we are feeling, we can make better decisions. And I do my best to help farmers identify those stages of the market, help them understand their feelings and their emotions, and help them make better decisions.
Yeah, maybe just jumping in here for a second. I completely agree with Trent's comments, and in terms of the psychology of things, I talk to clients about behavioral biases in investing, uh, and you discuss kind of from the, let's call it, the extensive research side of things, the behavioral side, behavioral economics. Behavioral biases can actually have the most downside impact on investment portfolio performance. So Trent, maybe thinking about what someone does, let's say their role relative to the data that they digest. How do your reports, how would they be different or differ for a farmer versus more of a passive farmland investor?
Yeah, so I developed those farmland studies, which really was the first of its kind in the world, where I applied technical analysis, a high level of technical analysis to farmland values. And by doing that research, I identified that the farmland values really study or follow the same patterns of every other asset class that I've looked at. So, and we want to buy high, or sorry, we want to buy low, we want to sell high. And when we can identify where we are in that market, we can make some better decisions. And farmland's just been a great investment for the last 15 or 20 years. but it hasn't always been that great of an investment. There's been times when farmland has dropped 50, 60% in value. And often, it's taken 33 to 46 years to recover in Saskatchewan, and that's a long time. So if you're 20 or 30, I mean, you likely have time to wait that out. If you're 60 or 70 years old, that can be financially devastating. So I really try to help people understand where we are in the market and try to use those emotions to help us understand where we are and maybe make some better
You
decisions.
know, and these prices have been where they are now for a few years, and I think a lot of people would say, "Well, there's no way it would ever drop again like it did 30 years ago or so," but, you think about that, look at the underlying side of this, so what is it that's driving these all-time high prices? Is it just simply demand and there's only so much land?
Yeah, that's certainly a factor, but I mean, that same conversation and same narrative existed in the 70s and early 80s also, before we saw that 60% drop in farmland values. It's a mix of fundamentals and what we call animal spirits, our emotions. And, the fundamentals are strong. There's low supply. It's getting less every year. There's been high profitability in farms, and low interest rates have certainly supported the value since 2007. But now, and we've really seen this in the last 2 or 3 weeks, a real shift in emotion, a shift from the emotion to math in the farming space and in farmland investments. So what we're seeing is higher interest rates and lower grain prices are certainly impacting the profitability and operations and certainly affecting investor sentiments.
At our Life After Harvest seminars this past November, I know will be part of our upcoming seminars actually this early March. And sorry, guys, I had to get a shameless plug in there. Early March Life After Harvest seminars for those listening. But Trent, can you explain how you analyze farmland using many of the same concepts that are actually used to evaluate other investable assets, equities or fixed income? A lot of folks kind of think about this as stock analysis. Could you dive into that a little bit for us?
Yeah, well, so, background, every asset, every chart that I've looked at follows the same patterns, very similar patterns. So whether it's farmland, cryptocurrencies, or the stock market, foreign exchange, it they follow the same patterns. And the reason for that is, Andrew, is the common participant in each of these markets is us humans. And the one thing that's been constant for millennia is our behavior. We want more that makes us feel good, and we want less that makes us feel bad. So if the prices are rising, we certainly want more of that. And we've seen that in farmland, for example. It's been a tremendous return. And when I applied those trend lines and uh, and moving averages to Saskatchewan farmland, I was shocked at how technical the Saskatchewan farmland chart actually is. It could be an example for technical analysis in textbooks.
The kind of analysis that you do um, really can be applied across different asset classes. This isn't just farmlands that you're talking about. And I know many farmers don't necessarily see farmland as simply an asset, very much an input, but how it's priced is a critical piece of the puzzle when considering their overall net worth, I guess.
Yeah, and on that, Brent, maybe I can ask Trent. You can expand on this. Trent, you and I were actually chatting recently about how Saskatchewan tends to lag behind other farmland markets, but those leading markets, they can actually end up being more of a forecast for Saskatchewan prices. So interesting, maybe kind of historical perspectives on how our prices compare to those, say, in Iowa. Can you explain what you've been seeing in terms of your research on this linkage?
Yeah, it's been interesting. You see the headlines and the narrative of the out of the farmers of the United States that they seem to be struggling more and having more difficulty than up in Canada. And what I found is when I did applied the farmland analysis to the state of Iowa, I identified that they seem to be 2 years ahead of Saskatchewan in the peak of farmland value. So, for example, in 1979, the state of Iowa, inflation-adjusted farmland values peaked in 1979, while Saskatchewan was 1981. And when I did the study for the year 2024, the farmland values in Iowa had already started declining and entered into they met the criteria for a take risk off a sell signal, as I call it in my analysis, my strategy. Saskatchewan hasn't entered that sell signal yet, but you want to be aware that it's starting to drop in other jurisdictions, and we want to be aware that it's the possibility for Saskatchewan as well. So when these prices drop, they can drop quickly and by more than we anticipate. So we want to look for the yellow flags and try to get ahead of the red flags, I guess, in the market.
Well, and going back to what Brent was saying earlier, farmland beyond being an input, um, is being thought of as the key, if not the core asset of the farming household. So, at PWM, in terms of our financial planning work, we've seen a significant uptick in a third version of retirement planning lately. Instead of just renting land out or passing it to the next generation, more farmers are actually thinking about selling that land. And I think, the trend lines you're talking about too, Trent, that's interesting.
And on that, Andrew, we've still got a few minutes left in our program here today, but you mentioned this earlier with your shameless plug. I know that the PWM is hosting a series of seminars again this year that tied directly into what we've been discussing today. So give us a bit more information about those events, Andrew.
Yeah, that's right, Brent. And PWM will be hosting our free Life After Harvest seminars this March. We'll be in Prince Albert on March 6th and then in Saskatoon on March 7th. We're going to cover how to understand farmland values, trends, and risks, what to consider before selling, leasing, or transitioning your farmland, why having a clear financial plan, why that matters so much in terms of legacy planning, succession planning, even just living a fulfilling life overall. And then also we'll talk about how to invest your wealth, and if you can take a personal pension approach to how you, if you do sell your farmland, how you can turn that now cash position into an ongoing investment position. And Trent will be at the Saskatoon event to answer questions as well. Seats are limited though, so we encourage anyone who's interested if you'd like to attend, go to our website, pwmprivatewealth.com, or you can call our office, 306 975 9500 to reserve a spot. Something else that's probably pretty top of mind for our listeners here today, Trent, would be, the outlook for 2026. We're just past the first month into the year here. Obviously, seeding is around the corner. People are thinking about land value in a little bit of a different way, going back to our input versus asset price conversation. But could you maybe talk a little bit about the forecast for 2026?
Well, I've been bearish grain prices for a number of years now, and I believe that trend's gonna continue. I think we'll see lower prices for longer and maybe even lower than today's values. I also am aware of the narrative around a tightening of the credit markets, and I'm seeing some examples of that tightening up now. There's the lenders seem to be asking more questions than they used to, and maybe the requirements might be more. So, you know, uh, well, how that's going to impact farmland values, for example, you're starting to see, say, some caution flags, and I think there's still some room technically for a rise in land values. But when you talk about Iowa, the state of Iowa farmland values, and they've been dropping on an inflation-adjusted basis for 2 years now, we have to start being open to the possibility of that happening in Saskatchewan and Canada as well.
And would that lag, is it always kind of a 2-year lag, or is it kind of an approximation based on, I guess, the overlays you've seen of the historical data?
Again, in 1979, the state of Iowa peaked its farmland values, and then 2 years later, Saskatchewan did, and we saw that significant decline throughout the 80s. It doesn't have to happen again in the future, but again, it's a caution flag. It's something to be aware of, and combine that with the narrative of lower grain prices for longer and tightening of credit markets. I think there's some catalysts that could bring bring lower farmland values in the near future.
When you look back to that stretch in the 80s where farmland prices dropped in Saskatchewan, was there any one reason why that was happening? Was it lower commodity prices or more than just that?
Well, people point to high interest rates as being the number one catalyst, and very well likely could have been, but it was a combination of factors. And I did a video on my YouTube channel, talk about the 7 catalysts that could lead to a drop in farmland values. And there's, you talk low prices, you're talking tightening credit markets, you're talking higher interest rates. If you raise interest rates 2%, it reduces the purchasing power by 16%. So roughly 16%. So that's significant, and we want to be aware of that. There's usually a whole host of factors at play, but you get a combination of them, then I think it leads to more dramatic and drastic retracements in value.
You've talked about how farmland is much like any other asset, any other commodity out there when it comes to investing. So when prices on farmland perhaps do start to pull back, is that then a buying opportunity? Do you see people stepping in at that point as they would on any market where there's a dip? People will buy the dip.
Well, I mean, people are going to see opportunity in a drop in farmland values, but anyone who's been in the investment space knows buying a dip is very difficult. It's a lot easier to invest with the trend than it is to invest counter to the trend. So where that dip is going, the dip where you're buying the dip might not be at the best time to buy. So.
It'll make for interesting conversation at the seminars that we've got with PWM coming up March 6th in Prince Albert and the following day, March 7th in Saskatoon. Andrew Rodych, to you, just some final thoughts and how people can get more information, whether they're wanting to attend one of the seminars or just have a one-on-one with you and the team at PWM.
Yeah, thank you, Brent. For sure, again, anyone listening, they can feel free to visit our website, pwmprivatewealth.com. You can give us a shout at the office, or you can even text that line as well, which is 306-975-9500. Whether you'd want a complimentary review of your current portfolio, discussions on financial planning matters, or to register for the Life After Harvest events. Again, 306-975-9500. We're here to chat.
And thanks to, can we call you the landman now and then, Trent Klarenbach?
Not sure I want that title.
Thanks for joining us on Money Sense. And Andrew Rodych, thank you for your expertise as well.
Thank you for joining us for Money Sense, where we explore meaningful conversations about money, life, and the choices that shape them both. At PWM Private Wealth Counsel, they're here to help you build a life as solid as the financial plan they've built for you. And most importantly, give you the confidence to know you're going to be okay. Financial planning services are offered through PWM Private Wealth Counsel. Portfolio management services are provided by Q Wealth, a registered portfolio manager, investment fund manager, and exempt market dealer. PWM Private Wealth Counsel is an owner and partner in the Q Wealth Partnership, where money meets meaning.